everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is the CEO of American Critical Minerals, a company actively exploring its Green River Potash and Lithium project in the Paradox Basin in Utah. It's Simon Clarke. Great to have you back on the show.
Great to be on again, Jesse. Thanks for having me.
Absolutely. Last time I had you on the show was in June of this year, and the first question we discussed was whether lithium was poised for a comeback. You said it was, and now it appears we could be seeing that comeback. I want to read a post from Katusa Research on X. They said, every lithium stock just woke up from a 3-year coma. In 2024, the lithium market was swimming in a 154,000 ton surplus. Next year, you're looking at the first deficit in 4 years. I know you're obviously watching the lithium market very closely. Do you think we're on the verge of another epic run in the lithium price?
Well, Jesse, I think we're certainly on the edge of a recovery, as I said in June, and I think we're starting to see that. Last week you saw the U.S. government take an equity stake in Lithium Americas Thacker Pass, which is huge. I mean, yes, you've seen debt handed out to critical minerals projects to help construction, but to take equity risk in some of these companies is quite a stance, and it just shows their view of the world and the fact that they've very much woken up that these projects have got to be funded and pushed forward to break, the reliance on overseas countries for a lot of the critical minerals in the US. And I think with lithium, you can talk about whether the ramp up is slower than forecast or whatever, and I think in some places it perhaps has, but the numbers they were looking at were highly aggressive. So it continues to grow, in a very fast pace globally, and so yes, I do think. I mean, at the end of the day, when prices got as low as they were, I think $6,000 a ton for lithium carbonate when it had been over 80,000. You can't bring on new projects, you can't build new projects, and it's very hard, apart from the most lean projects in the world, to make any money at those prices. So, now it's back to, I think, somewhere between $10,000 and $11,000 a ton. For me, I've always felt that 20 to 25 is the right number, because at that number, people can take those investment decisions to build projects, to keep running projects, and everyone can make some good returns. So, it'd be nice for everyone in the world if it just went up and stopped at $25,000 a ton. But as we see with commodities, it'll probably go beyond that and then come back. I think lithium is maturing, so hopefully we won't see the really wild swings that we have seen. I don't think it'll go back up to 80,000, but I think we're going to see it, as it matures, really start to sort of hopefully get to that kind of range again where everyone makes good money. So absolutely, I think the future is looking a lot better again on the lithium side.
And you mentioned it. I'd love to dive a little bit deeper into this bombshell piece of news in the lithium sector, that the U.S. government has now taken a 5% stake in Lithium Americas. I can see no better evidence of lithium being considered a critical mineral to the U.S. administration than this move. How do you think this could impact the lithium market moving forward? And do you think we'll see more of this ahead, perhaps an increased stake in Lithium Americas, or the U.S. government taking a stake in other lithium producing companies?
Yeah, I mean, Lithium Americas is one they've taken a big bet on, and it is the biggest project in the US, and actually one of the biggest, if not the biggest, in the world. For Thacker Pass. So, absolutely, I think it made sense for them to start there. I think they will definitely go into other projects because, yes, it's a big project, but if you believe the supply-demand forecasts, they're going to need a lot more than what Thacker can produce. So, if we step back, I mean, the U.S. production of lithium is tiny. It's way less than 1%, of what's mined globally. So, we're going to have to do several Thacker passes. So yes, I do think it is the way forward. I think it's also a statement of intent of what the U.S. government will do across the Critical Minerals Board. It's not just lithium; are other projects as well. So, I think it's a really good sign of intent. I think the fact that they also opened up the critical minerals list this year, as they do every several years, and they've added potash and uranium. Well, uranium's not formally on it yet, but it will be. But for us, potash has been added, which is another obviously key for us. So those projects on that list are way more likely to get funding from the government, whether it's debt or equity, and also subject to expedited permitting. Obviously that's really important as well.
Well, potash, another commodity that looks potentially poised for a comeback. Prices rising steadily so far this year. Still a long ways to go to get back to previous all-time highs of April 2022. So I guess a similar question to lithium. Do you think we could get back to those prices? And what are the main catalysts that you currently see driving the potash market?
Yeah, listen, I think we can see, I think we'll continue to see it moving up nicely. I don't know if it'll get to the crazy prices that were seen, at the time of the start of the Ukraine war. Obviously that took potash, or on the face of it, took potash, some of the potash off the global market. So, it spiked on the back of that. Now, who knows? Geopolitical events today are even more crazy, perhaps, than they were 3 or 4 years ago. But I think one of the biggest drivers domestically, and why the administration put potash on the critical mineral list, is they do import about 95% of potash, which is a massive number. Now, some of that, a big chunk of that has been from Canada, which is a major producer and, historically a strong ally with the US. But obviously, we've seen the US doesn't want to be tied to anyone here. And you've got China and Russia and a lot of other parties as well that, relations are even more strained with. So, I think that's a huge driver. So I do think you'll continue to see them move up steadily. I think there's also a recognition that with agriculture typically growing in and around 5% compound annual growth rate, and potash, the key fertilizer globally to help agricultural efficiency and ward off disease, especially as soils get depleted, as there's more and more farming. So it comes down to food security, it becomes down to supply chain security, and all of these are key, and that's why it's gone on the critical minerals list. And I do think it's a positive time for potash, and as well as the Department of Energy on the lithium side funding projects with debt. There's also a lot of money available in the Department of Agriculture, for agricultural type products, including potash. And we actually did see a very interesting grant to a peer in the Paradox Basin called Sage Potash. They got a grant from the Department of Agriculture to help them build a processing plant. Now, I think we're even better positioned in our location in the Paradox, and I do think as we develop the project here, the opportunity to secure funding is on both the potash and lithium side. Obviously we've got two critical minerals rather than just one, is bigger and bigger. So it's definitely a very exciting time to be in domestic critical minerals.
Well, I want to dive into the company in just a moment and hone in on your project there. But first, I would like to maybe pull on that thread regarding potash being added to the critical minerals list in the United States. Do you think we could eventually see a similar situation with lithium in terms of the government actually taking a stake in certain potash producers? And what sort of tailwind does that government support provide to the sector?
Yeah, I mean, I do think it's logical. We've seen it in lithium, starting off by providing debt to build projects. But I think, the fact that this government is prepared to take more of a risk and take equity risk, is a good sign. The Department of Agricultural money is actually a grant rather than a loan, so that's actually some of the best funding you can get. And it's because they want to see potash produced very quickly. On potash, you're really coming from a standing start. Apart from Intrepid Potash, which produces 300,000 tons a year, and you have a country that's consuming close to 10 million. You've got to move things quickly and get things going. And there are some good potash deposits in the US, but they've got to be driven forward aggressively. So permitting, funding, but also not just funding to build things, funding to help earlier stage companies develop and get to the next stage. And so, equity obviously is the riskiest investment of all for governments to take, and I think a really strong signal of intent. And absolutely, I think we'll see it in potash and other critical minerals as well.
Well, let's discuss how American Critical Minerals fits into the picture. As I mentioned at the top of the show, we did discuss the company in June of this year, but there's a lot of new viewers since then. So could you start by providing an overview of the company?
Yeah, so we have a large land package in, what is thought by many to be the biggest evaporate basin from the potential of potash production potential, if you like, in the US. Some people term it a super basin, the only one in the US. And the super basin globally, there's 7 or 8 of them. Obviously, you have a big one in Saskatchewan, but it's a basin with the potential to produce 1 billion tons of potash. And so the paradox, meets that criteria in the eyes of many. So it's a great place to be. We're 20 minutes as the crow flies from the only producing potash producer in the US, Intrepid. Potash is Moab mine. Now they have another facility in Utah and one in Arizona, but Moab was the original. It's been producing for 50 years. It's the first place they introduced solution mining globally, which is where you actually pump warm brine solution into the potash cycles, create caverns, if you like, melt the potash and then pump it to the surface in an aqueous solution, which you then concentrate by solar evaporation and concentrate the potash. So it's got a rich history of potash production very close to us. We're targeting exactly the same potash cycles, potash zones as Intrepid. And so that's how the company was formed. It was focused on major potash fairway in the paradox. And in recent years, what's been really intriguing is the work that's been done on the lithium brine side. Because in the formation, the potash is at about 4 or 5 thousand feet, and then 2 to 3 thousand feet below that, you've got lithium brines. And, in particular, our neighbor that holds land contiguous with us, so right next to us to the north and neighboring us in the south, called Anson Resources, has spent a lot of money and time defining resources. They've now done a hugely successful pilot with Coke, using DLE technology, produce battery or shown the ability to produce battery grade lithium carbonate. And on the back of that, you've seen POSCO sign an MOU with Anson, and just last week, LG, the big battery company globally, signing a definitive offtake. So you got to commend Anson. They've done a lot of terrific work. So we've not spent a penny, but given we're the meat in the sandwich, we now also have lithium, huge lithium potential in our brines. And we know from all the historic oil and gas data across our project and surrounding it, 23 wells that there's data for, and we know we have the same potash, we know we have the same lithium, and on the back of that, you've seen this week we've come out with, we had a large exploration target under 43101. We've now added a large lithium target, and those are very meaningful pieces of work under 43101 when you're dealing with blanket style mineralization like you are here in lithium and potash. So, we've got 2 very large targets, and actually we did end up with a third. There's bromine, which is a very interesting industrial gas, is a very large byproduct of the lithium production process that Anson's looked at. And again, we have large quantities of bromine. So, we now have three large exploration targets, two of which are critical minerals, and I think we're really well poised to drive ahead. We either have neighbors who are focused on potash or lithium, and we're looking at both. We've actually locked up the rights to both. We added placer claims to our potash licenses, and we have drill permits where in each hole we drill, we can test for both, which is great. So we're really excited. We're well positioned, and we're ready to go.
Well, you've touched on some of the milestones that the company has achieved there in the Paradox Basin. Maybe you could dive a little bit deeper into that, particularly since the last time we spoke, or maybe since the beginning of the year. What are some of the main items of progress that the company has made that come top of mind for you?
Yeah, I think for me, we've been really looking to get ourselves positioned to be able to drill. And so, first off, we've renewed all our licenses, which is not a small challenge for a young company because it's the licenses are expensive, and as I say, we both have potash and lithium, so they've all been renewed for another year. We've learned a lot from what Anson has done on the lithium side. I think since we spoke, the deal they have with POSCO, the results of their pilot, and now definitive offtake has been very positive for us. I think directly in the company now we're updating our 43101 technical report, which will be available shortly. But we have just on Monday published two very large exploration targets, one for lithium, one for bromine, to add to our potash. So we've learned a lot. We've refined all the information we have. We know where we need to drill from the historic data as well. So there is good drill control, and I think so. That's really been our major focus for the last several months, and that now sets us up really well to be able to drill, later this year or early next. We don't have any constraints and timelines for drilling. We're in the heart of Utah, and obviously that's 2 years ago was ranked number one for in mining investment in the world as a jurisdiction. So really well positioned on that front. And then I think just recently we announced the addition of Ken Taylor to our advisory board. And Ken was a senior VP with Intrepid. Obviously, we're 20 miles away, 20 minutes away as the crow flies from their project. There's obviously lots of synergies with what we're doing. They are sort of continuing to have to drill after 50 years of production, and we're close by. We're flat lying. We're targeting the same cycles. So I think at some point developing that relationship, and beyond that, Ken's knowledge of the landscape of what's happening in the evaporate basins in Utah in general, but his knowledge of potash, salt horizons, and lithium is first rate. So to have a guy on the ground like that as part of our team is very key strategically. So yeah, we've done a lot of work, a lot of things happening.
That's fantastic. I have to pull in the thread regarding bromine. I haven't even heard of that commodity. Could you maybe just give us a little bit of an intro to what the main industrial uses are and kind of the investment thesis behind that particular commodity?
Yeah, I mean it's a specialized industrial gas. They use in certain industrial processes. It's dominated by two or three players. I think Tetra is one of it in the US. It trades at about, I think, US 360 a kilo, so which would be equivalent to about $3,600 a ton. And we have, in terms of our exploration target, we're looking at somewhere in the 3.3 million to 9 million tons of bromine, of contained bromine. Obviously, the numbers are something like 2 billion tons of it from a volume perspective at a grade of about, close to 3,000 to 4,000 ppm, so good grades. And that it distills down into about 3.3 to 9 million tons. So, when you do an exploration target, there's always a pretty big range. But even at the lower end of that scale, 30 3.3 million tons at 3,600 a ton is a very nice byproduct to have.
Well, talk to us some more about the infrastructure you have in place at your project and any other pertinent details that maybe we haven't covered yet. Your relationship with the local government and community. You mentioned you've been renewed all your permits. Obviously, that's going smoothly. But just very interested in the overall regulatory environment as well in that jurisdiction.
Yeah, absolutely. So, we're close to the town of Moab in Utah. We're just off a major highway. Because we have Intrepid just up the road, they put in a rail spur to that facility, so we've got rail very close. As I say, it's a mining state. The Paradox Basin has seen a lot of oil and gas work over the years, uranium historically, and now we're seeing obviously more on the lithium side as well as the potash. So, in terms of knowledge of mining and how to mine the Paradox, there's a lot of knowledge locally. And you've got all of the either rail or road routes to the industrial heartland of the US and the agricultural heartland. So extremely well placed to develop these two critical minerals. And in terms of the state, as I mentioned earlier on, it was the Fraser Institute #1 pick globally as a mining jurisdiction from the investment perspective in 2023. It's definitely in the top five last year. I haven't seen those numbers officially yet, but a good place to work. We're lucky we have a guy on the ground in Moab who is ex-BLM, who represents us. So, we have an extremely good relationship with the regulators. I think I told you before that getting potash permits is a long, arduous process, or has historically been. I think we're going to see that ramp up under this new administration. But the whole process with the BLM involved a lot of environmental impact work and community outreach by the BLM, and they did a great job on that. And so, as I say, we're permitted. We have a plan of operations approved. We're permitted for 4 holes on BLM land and 3 on state land. So we have a total of 7 that we can drill. We've worked out what the bonding is on the BLM side. We've already paid the bonding on the state. And, so we're pretty much ready to go on that front. And if you think of these blanket styles of mineralization, you don't need to drill hundreds of holes. There's, as I say, there's a number of historic holes around us. And so we believe if we drill in the 1 to 3 holes, we'll be able to come up with a good resource, converting the exploration targets on both the lithium and the potash side. So, I think we're really well placed on that front, and we're in a great jurisdiction to drive this forward.
You raised $1 million in a private placement last month. How do you plan to put that cash to work? What is your overall cash position right now and your debt obligations, if any?
Yeah, we don't have any debt. We're fully paid up for the year. We have about 700,000 Canadian, I think, cash on hand. We did pay for some marketing, which we announced. Some high level marketing to just build the awareness side of it. So we announced that a few weeks ago as well. So we continue the push to get the name out there and continue to build awareness. As I say, the next phase for us will be to add further capital to the balance sheet to drill. And so obviously it's good for us that our stock prices, has pretty much tripled over the last 6 months or so here. We feel that with the awareness out there and knowledge base and what's happening in critical minerals, we'll be really well placed to raise capital and then get the drill bit going. That's really the focus of the company now. We've got all the pieces in place on the technical side. So really it's been a little bit about making sure the market is aware and ready. And so we've spent some money on that. Our monthly burn rate beyond that is typically, it's very low. It's 50 to 60,000 a month. So, we've got lots of running room still, but obviously, we want to add the capital here to drill, and these holes are expensive. They're deep. They go down as deep as 8,000 feet. So, it be in the range of 1.5 million US a hole. And, ideally we want to drill 3 of them. So, I think we've done a lot of really good work positioning the company to take that step, and, built the team, and I think we're ready to go here. I think we're ready to rock and roll. As I say, we've got permits in hand, and, we now know a lot more about the lithium and bromine as well as the potash. So well positioned.
Well, Simon, let's end by opening the floor to you. Is there anything we haven't yet discussed, anything you want to emphasize that you think it's important for potential shareholders of American Critical Minerals to be aware of?
Yeah, listen, I think potash has historically been a niche product. It's definitely becoming more mainstream, and a lot of it is driven by the growth in the agricultural sector and the need for food security as well as energy security. So, we're seeing that in spades with this administration. So, I think that's a real key here. You're starting to see a lot of interest come back into investing in potash. There aren't a lot of junior peers. We've seen Millennial Potash, which is a company that's often cited, with a project in Gabon, get money from the U.S. government, because the U.S. government is trying to add new sources of potash, even if it's overseas, to drive it forward. And Millennial stock prices, I think it's 10 to 15 times over the last 12 months. It's gone from about 30 cents to about $3.40. And that's in Africa, in Gabon. Now, they are close to tidewater, but I would point out we're right in the heart of the US. So, there's some really good signs of what's happening in the sector in terms of the juniors. And then, as you mentioned off the top, we've seen a lot of the lithium players actually start to get a bid again and move up. So I think with both having 2 products rather than one, and being able to drill both in each hole, and move this to resource and PFS in a very quick timeline. Again, this isn't hard rock. This is evaporate basin, where you're testing brines and potash cycles that are blanket styles of mineralization. So I think we can do a lot very quickly here, and I think we can close the valuation gap very quickly on our peers like Millennial. I mentioned Sage Potash, which is further south, a little bit more advanced than us. They have a resource out of there. I think I would prefer I prefer our location and our proximity to the existing production in the basin. And I think we've got a lot of room here, as I say, to close that valuation gap.
Well, Simon, this has been a fantastic conversation. I'm going to put links in the description below to the American Critical Minerals website as well as social media for people to follow along with the company. Thank you so much for coming on and sharing your knowledge with the audience.
Thanks, Jesse. Appreciate it.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.